You know when you watch a movie about how social media or the internet is bad, and it just falls flat. And then you look at who made the movie, and you realize, of course it sucked. They just don't get it, even if what they said is correct. I not only have a background in traditional finance, but also a lot of experience with MTG finance. I have my reserve list speculations. I have spent a lot on expensive cardboard, and I've sold cardboard for a lot as well. I get it. So when I say MTG Finance is not a very good investment, and you likely will not make money from it, I hope my message doesn't fall flat. MTG Finance is a very poor investment, but a lot of people seem to think that there's a lot of money to be made here. I used to be a financial analyst, and I will treat MTG Finance here as a real big boy investment and take a look at MTG Finance. And I want to be clear here, this is about you as an individual. If you are a store cracking cases while paying for discounted prices that you got from distributors, obviously that changes the math a lot and you're operating on a different level than an individual who's looking to invest and save money for their own personal finance. Another disclaimer, this is not financial advice. I am talking in generalities, and honestly, you can do whatever you want with your money. Nothing I say is guaranteed, and nobody can 100% guarantee anything, especially in finance. In this video, I'm going to be talking a lot about buying cards, especially singles, and when you have a big collection of singles, it can be hard to keep track of them, which is why I use today's sponsor, Card Castle. This is an app that lets you scan and sort your collection. Recently, I got some packs of Final Fantasy as part of my MagicCon Vegas tickets, and now I can scan all of those and see what I got from the packs. This way, later on, if I decide there are some singles from the set that I want to buy, I can go to Card Castle and search up to see if I already opened one, and if that's in my binder. This way, I don't end up buying duplicates and wasting money. This is especially true for Commander players, since having 2 copies of a niche card is oftentimes not very useful. I used to spend hours searching through binders and bins of cards looking for stuff when building decks, and now I can much more efficiently determine what I already have, saving me a lot of time. And honestly, it's that simple. This is the best scanning app I've used. And that's the truth. So much so, Card Castle literally does not give me notes or corpo talking points. This product speaks for itself. It is the easiest way to sort your collection digitally, and since you can sign up for free and scan 1,000 cards today without paying a single penny, there is no reason not to try it out. Also, you can get 1 free month of premium access using my link in the description below. Thanks to Card Castle for sponsoring the video. There are a few different ways people look at Magic cards as investments. The first one is buying packs, thinking you're actually going to get valuable cards and make money. This is gambling, not investing. I know a lot of people conflate the two. Many times, back when I was working in finance, and I would tell people about my job, they would say, oh, I don't touch the stock market, it's like gambling. It just goes up and down randomly. Now this is kind of true on a day-to-day basis, and with day trading and technical analysis, you can say it's kind of close to gambling. I'm not going to bore you too much with a lesson here, but technical analysis is relatively risky, and day trading is something most people shouldn't be doing, but it is still pretty far from actual gambling. And cracking packs to make money is definitely something nobody should do. Buying packs is a really bad investment. How bad? Well, check out this website, Just Buy Singles. It's a really cool way to see how much you can make or lose from a set. Here, I'll crack 12 collector boosters of Final Fantasy right now and see how I do. Awesome, look at that loss. And don't just take my word for it. I had a bunch of my patrons try this as well to see what their results were, and most of them lost quite a bit of money. Some of them went slightly positive, and a few were decently positive, but of course, this is assuming you can sell everything at market price. If you as an individual have ever tried to sell cards, you might have realized that the market price is usually not what you're getting, especially if you want cash instead of store credit. And you can't always sell the $1 or less cards. Usually those become a total loss because you just can't offload them. And of course, nobody in my little experiment here actually hit the jackpot and got a golden chocobo. Link to Just Buy Singles in the description, by the way, if you want to check out the website for yourself. Now, you might be saying, Trinket, of course buying packs isn't a good investment. Real MTG finance heads already know that. Real MTG finance is specific singles and sealed products. Only gamblers actually crack the packs. Some people might even consider this similar to commodity investing. So let's apply some financial analysis here and see how that holds up to other commodities. Normally, the best commodities that people actually trade are the ones that effectively always have demand. So for metals, we're talking gold, silver, platinum. For food, wheat and cattle, and stuff that is used in manufacturing, like lumber or oil. Now look, I like MTG as much as the next guy, but let's not kid ourselves here. This game does not have the staying power of lumber and oil, which leads me to my first point. The potential for everything to upend and change all at once. An investment you want to hold for a long time needs to be pretty stable. And if you want to hold it for, again, 10 years or longer as a real, honest investment in your future, that thing needs to stay relevant and gain relevancy for the price to go up. And if you're using Magic cards as an investment, the likelihood of something wild happening and changing the value of your cards is significantly higher than the value of gold. To be clear, I don't think Magic is dying anytime soon. I'm not saying that in 10 years everything will be worth zero, but there are aspects of the game which are struggling. Competitive 60-card formats are losing popularity in paper. It is not a surprise that modern and standard events are not firing as much as they used to. And a lot of tournament grinders are moving to new competition. One Piece and Flesh and Blood are very all in on their 1v1 competitive tournament grinding aspect. There is a real future where Magic's market share does decrease in the coming years, and that does affect the price of cards. If more people care about One Piece or Flesh and Blood, then presumably less people care about Magic. And think about the way most players engage with the game now. It's Commander, and that is a format where a vast majority of people don't care about proxies. CEDH tournaments are not run by WotC, so even in the competitive side of Commander, you don't need to own an actual literal real card. Again, we don't know anything for sure, nothing is guaranteed, but when I think about how these trends will affect the price of products in 10 years, I'm not seeing a huge boom. Also, let's compare sealed product to stocks in a company like Apple. Tim Cook has a lot of stock in the company. I know it's less than other companies, I just picked Apple because people know what the company is and does, and has a vested interest in keeping the value of that stock high. And although Tim Cook could do something crazy tomorrow and completely tank the value of the company, the odds of that are pretty low. Hasbro, however, does not have the same relationship with the secondary market. Obviously, they do understand the secondary market and see value in it in some way, and right now their business strategy leads to cards costing whatever they cost now, boxes costing whatever they cost now, but that's only because the current business strategy has decided that that is what the secondary market should look like. What if that changes? Let's say tomorrow Wizards decides they want to print and sell more collector packs of Final Fantasy, so they do another print run with a serialized Buster Sword in it. Will the old ones hold their price? Won't this massively increase the supply? Isn't this a huge risk that doesn't exist with a lot of other stocks or commodities? Also, if we know opening boxes is for suckers and gambling addicts, who are you selling these boxes to? If somebody wanted to build a commander deck around Cloud and whatever other cards, it really doesn't make sense for them to buy a collector booster box. It's cheaper to just buy a single of Cloud and then build a deck. So if you want to sell your box to someone for more money than you bought it for, it has to be someone who is either a gambling addict or somebody who actually thinks the box will go up even more in value. I mean, realistically, this is basically a pyramid scheme. You're just selling to the bigger sucker. And what happens when you can't find somebody who's a bigger sucker than you? Then you're stuck with this box that you can't offload. And the high prices of boxes now feel like a massive red flag. People point to these and go, wow, the cards are so expensive, they have value. I gotta get in there and scalp them. And sure, if you are one of the few people who managed to get a box at MSRP, you probably were able to sell it to some sucker for a profit. And good for you, I suppose. But that's all gone. Everything sold out. that time has come and gone, and there probably weren't many opportunities to even do that. And these prices are a peak for Magic. This is some of the most expensive sealed product we've ever seen. How much higher can it realistically go? This doesn't indicate a good time to buy. You're supposed to buy low, sell high, not buy high at the peak and hope that it peaks again. That is a recipe for disaster. Now let's talk about singles. I'll separate this into a couple categories. We got reserve list, non-reserve list, and the new secret reserve list. Starting with non-reserve list. As the years go by, we're finding that staples, which hold value for a long time, has just become less common. Power creep has just caused cards to be obsolete way faster. More aggressive bans also tank the price of cards, causing effectively eternal formats to rotate. Your Goifs, your Lilies, your Snaps are not what they once were. Those used to be the cards that you would really hold on to and say the value's going up for these older printings, and this is my investment. And what happened to that? So even if a new powerful card becomes a staple in some format, what are you going to do? Buy it and hope it goes up? It's just going to get power crept again. These days, Commander drives prices a lot more than other formats because it's the most played format. Staples like Demonic Tutor, Cyclonic Rift, or Tithe seem to hold value, but do they actually go up is the problem. Yeah, they hold value, but how much does it increase? They do increase a little bit over time, but then once a reprint happens, they usually fall. Because once the value goes up, Hasbro is the one who gets to cash in on that by putting Cyclonic Rift in a pack and selling it to players. It's hard for you to cash in on it because their business strategy is to increase the value of the shareholders, not the Cyclonic Rift holders. Again, they don't have a vested interest in having the prices of these cards climb forever. They're going to use that as leverage to sell cards, and they don't care if that's going to tank the price of them. Okay, what about the reserve list? Those should infinitely go up in price, right? I mean, they can't reprint them, right? Well, I mean, they might. Like, they could. Magic 30 is probably them testing the waters. If the shareholders think that breaking the reserve list would make them money, then it would happen. I know a lot of people want to comment about promises or lawsuits or blah, 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 but realistically, I don't think any of that would happen, and if it did, presumably that is factored into their decision, right? If they think, hey, we're going to get a lawsuit or something, a class action, they're going to factor in the settlement cost for that lawsuit and put that against the value of putting Black Lotus in a pack. And guess what? Putting Black Lotus in a pack is going to be worth more than the class action lawsuit settlement. Of course they can break the reserve list. Also, the most popular format where these cards are actually legal is one where most people are okay with proxies. The only reason someone would actually want a real one is if they are a collector and care about having a real copy of the card. Again, CEDH, the only competitive format where you're gonna really see these cards get played, is all proxy friendly anyway. As a little anecdote to this, I have a friend of mine trying to offload some Bazaar of Baghdad's. Now, it's really only useful in vintage, but it's not like he can find vintage players to sell these to because there's like no vintage players. And the card's not very useful in Commander, and if somebody wants it, they're just gonna proxy it. So he's kind of stuck with these. It's pretty difficult to actually sell these expensive cards. This isn't as liquid as a stock. Of course, you can sell it to a big store, but when you're selling cards that are this expensive, and you're only selling it for 60% of market value, that is a massive loss. Now here I want to make a slight note about cherry picking data. Obviously, some things that I'm saying here are anecdotal, or I'm just showing small specific examples. Not everything I'm saying is guaranteed or 100% the same across every card and every set and every product ever. I'm trying to talk about it in generalities, but I can only put one or two things on screen at once. So please keep that in mind. Additionally, I feel like a lot of people like to imagine a world where they made all the correct MTG finance decisions and became very rich, and that would happen a second time. Like if you bought 100 Black Lotuses when they were $100. But you can play coulda, shoulda, woulda with the stock market too. If you bought a ton of Nvidia stock back in 2020 when it was like $20, you coulda, shoulda, woulda made a ton of money too. This isn't a good framework for evaluating investments. With the power of hindsight, anyone could be a billionaire. You need to try and think about the grander picture in general when determining if an investment is safe or not. What about the new reserve list though? I'm talking Universes Beyond and special treatments. Like yeah, Wizards could print a Black Lotus or whatever and affect the price, But they literally can't print these ones, right? I mean, these companies would sue. And this new reserve list has caused a lot of cards to increase in price, just like the old one. If you want to learn more about this new reserve list, check out Blood Artist's video on it, link in the description. But again, it's all fake. They can just reprint Cloud and call him Fluffy Water Vapor Man. Yes, it is confusing and annoying, but if Hasbro thinks it will make them more money, they'll do it. They are literally already doing that with Spider-Man. This set on Arena is going to have Arachnid Boy, not Spider-Man. So that means they already have the art and names and flavor text for a full in-universe set for the Spider-Man set literally ready and waiting. They can then at any point just export those and print those into paper to print a new version of Spider-Man without breaking any contracts. And if you were like, they would never do that, that'd be too confusing for new players. Just look at companions. They would rather errata the mechanic instead of banning the cards because they want people to keep cracking packs. They will do things that are confusing and annoying to players if they think it makes them more money. Okay, how about special promos like masterpieces and judge foils? Those will go up in price, right? Well, kinda, sometimes. These are still subject to power creep. Look at Vendilion Click. Once a $200 promo is now not even close to that. Or what about Elish Norn that had that special Phyrexian Judge promo? Well, there was a secret layer printing that was the same thing. Look, I don't want to say you can't ever make money in MTG Finance, or that there isn't some fun in it. I have 15 Zuberi Golden Feathers because it's reserve list, and we'll go to a Griffin set one day, and maybe it'll go up from $1 to $5 and I'll cash out or whatever. There's nothing wrong with cracking packs for fun either. My problem is when people try to treat this as a legitimate money-making strategy, a real investment in their financial future. This leads to so many problems. One, the investor gets burned often because Hasbro only cares about their, real investors, the ones invested in stocks, not the people invested in cards. Additionally, the scalping and price gouging harms players. It affects the game. It sucks when people can't get access to cards and product because people are buying them up and scalping them. And as players' frustrations begin to build and build and build, and the scalping problem gets bigger and bigger, eventually, if that starts to hurt Wizards' bottom line, then they'll change something, and then the whole thing will come crashing down. And I know gambling is really normalized right now with all the sports betting and stuff like that, and collectibles and blind boxes, but not to be too much on my soapbox here, it's really bad. None of these are good ways to make money. Your personal finance and your savings is legitimately really, really important. It is very important to be financially literate, especially today in the current economy. Now, normally I conclude my videos with some actionable items, cards to use, commanders to play, but this time, I guess I should give some general investing tips. Again, this is not financial advice. I'm going to talk about some general ideas and suggestions. I feel like a lot of people think that investing in stocks or gold is something that is exclusively for the extremely wealthy. And not that long ago, this was actually true. There used to be tons of fees, and stocks were expensive things you had to buy in one go. But in recent years, the industry has changed a ton. I'm not going to go into all the details and history of it here, but basically, this app Robinhood was a massive shakeup for the industry. And afterwards, many trading platforms went to a zero-fee structure. So now you can trade regularly without getting nickeled and dimed, making smaller investments a lot more reasonable. Additionally, you can buy fractional shares. So if you want to invest in Costco, but don't want to buy a full share, many platforms will offer you the ability to have part of one. And things like ETFs let you trade with commodities like gold and silver much more easily. To be clear, I am not suggesting you use Robinhood specifically. It's not the one I use. Generally, you should use whatever trading platform you like the best. They all have different UIs and tools. There's a lot of options out there, most of them free. Now, another thing people worry about is risk. What if the market goes down? What if you pick the wrong stock? It can be scary to invest. Well, there are a few options. You can get into the market as a whole and diversify really well with indexes, mutual funds, and ETFs, which are basically bundles of stocks that let you take in a lot of what the market has to offer overall. There are popular ones like the S&P 500, the Russell 1000, which give you a large mix of industries and businesses. So if the market does well overall, for the most part, your portfolio, if it has these in it, is affected positively. And generally, over the course of many years, it tends to trend upward. Of course, any given year there could be some recession that has it go down. Nothing is guaranteed. Now, you can also pick individual stocks. One big way to lower the risk of your portfolio is by having these stocks in different sectors. Here are all of the market sectors. I'm showing them on screen. Basically, the idea is if one sector does poorly, if your whole portfolio is one sector, then your whole portfolio will tank. So by spreading out and investing in different ones, your total portfolio can have less non-systemic risk. I'm going to link below this Motley Fool article and Investopedia article about sectors and diversification using ETFs. I think there's a lot of good information there. Now, this conclusion to my video is by no means all of the information you need to start investing. But my goal here is, at the very least, inspiration. I want to say that it has never been easier to start investing than today. And personal finance is extremely important. So if you want to be serious about your investing, as an individual, you need to look into serious investments. Set up a Roth, stock portfolio, whatever suits your needs to put your hard-earned savings into, rather than something as fickle and risky as magic cards. Thanks for watching. I hope you found this video interesting. Thanks to my patrons for cracking all those collector booster boxes for this video. And special thanks to my tier 3 patrons whose names you see here. If you want to join, check out the link below.